COVID has actually reinforced the faith of people in gold once again.
So hello and welcome to the one-to-one Global Online Precious Metals event. Today I'm joined by Chirag Sheth, Principal Consultant for India at Metals Focus. So Chirag, thanks for joining me today.
Thank you, Amy. It's a pleasure joining you.
And let's jump right into it. So maybe can you give me a bit of background to you and your specific expertise at Metals Focus?
Sure, Amy. I've been in the precious metals industry for 17 years through various roles. Have been fortunate to work with some of the large companies in India as well as globally. I've been with Metals Focus now for 9 years, head of their India office, essentially looking at the South Asia and the East Asian market. Metals Focus, as you know, is one of the world's leading precious metals research and consultancy companies. And our greatest strength is our intensive travel program, where we visit the key markets of the precious metals demand and supply to understand, how the market works, how is the demand and supply dynamics. And that helps us do a bottom-up analysis moving on to the price as well.
Okay, great. So maybe we can start off by looking at that supply and demand outlook and analysis. So where are you seeing kind of physical surpluses or deficits, across the international metals markets, and how is this impacting pricing?
So I think, if you look at the demand and supply, dynamics of the gold market, over here, essentially what is happening is that, the supply essentially comes from two areas. You've got the mine production and the above ground supply, which comes from recycling. I think for 2023, we look at about, 3% growth on a year-on-year basis in terms of mine supply, essentially coming in. The big growth areas are likely to be, North America, South and Central America, and Oceania. On the, recycling, as you are aware, is largely a price-driven activity. So if gold prices tends to be a bit softer, then we see a bit of recycling, reduce, and that is something that we are also expected to see in 2023, where because of the lower price expectation, we'll see a marginal drop in the recycling side. But overall, if you compare mine supply as well as recycling, we'll see a kind of flat to marginal growth. Now, if you come to demand, demand is essentially a function of jewelry, investment, and central banks, which are essentially the three broad areas of demand, and you've got the industrial demand as well. If you look at jewelry demand, what is interesting in jewelry demand, and obviously we'll cover that later in detail, but jewelry demand this year, we expect growth in jewelry demand coming in, across the regions, China, India, some parts of East Asia. We expect growth in jewelry demand. In terms of investment demand, I think what is interesting about investment demand is that while it is price driven, as gold prices reach certain levels, in a lot of countries, there is this expectation that these are lower prices, and essentially it's a good opportunity to buy gold, and then we should, start buying gold at, dips. So for investment demand, we expect a marginal increase. So obviously the growth in investment demand could be lower than the growth in jewelry demand. Whereas central bank is very interesting actually, Amy, because last year we had large purchases from central banks. I think Metals Focus estimates 2022 central bank purchases to be around 1,100 tons. This year, obviously, we do not expect that kind of the 11,000 ton plus, buying. Essentially, what we are forecasting is 700, 750 tons of central bank buying. That is still elevated when you look at last, 4 or 5 years, where it ranged, obviously pre-pandemic, it ranged at around 600, 650 tons. During the pandemic and post, it was 250, 400 tons. So that still remains at an elevated level, but not as strong as, probably 2022. So in that sense, when you look at the fact that jewelry demand is higher, investment demand is marginal, but the central bank buying is reduced, overall demand, I think, is just marginally lower, 5 to 6% lower, essentially because of the drag of the central bank buying, which was very strong last year. And we forecast a surplus into the market. Now, obviously, when you've got a large surplus that we expect, you also expect the institutional buying to support, that kind of surplus. Then only there is a certain level of price support which can, come in. However, given the fact that we are not too positive on gold prices, going forward because of the way macroeconomic scenario is shaping up, we think that the institutional support could be a bit difficult to come in. Given the fact that Wells Fargo expects prices to actually trade below $1,600, in 2023.
Okay, great, interesting. I thought we could backtrack a little bit to look at, the COVID pandemic and the sorts of impacts that you saw on the precious metals markets across India and the rest of South Asia. And are there lasting impacts that you're noticing from that, or any rebound at this point?
Yeah, that's a good question, and I think what's very, very interesting, and this is something that I always say to people, is that COVID has actually reinforced the faith of people in gold once again. Because we've heard many stories, and I also cover Thailand, and Thailand is a very, very strong example where in April images across the world went viral of serpentine queues outside gold shops in Thailand, right? People were selling their gold to ward off, the economic uncertainties. Gold was the only holding they had. In India, we had examples where people don't sell their gold essentially because we've got such a vibrant gold loan market where non-banking financial corporations and banks have got a large portfolio of gold loan where people can just go to the bank and within 3 minutes pledge their gold and get the money back. So that saw a big jump. In some of the other countries also we saw people selling their gold holdings in order to, because they didn't have jobs, they didn't have full incomes. Many countries, while people did not lose jobs, they had 40-50% reduction in pay cuts. So I think gold somewhere helped people, right? Now, if you look at the question on the rebound, I think what's interesting is that India probably was the first one to see the big rebound because late 2020, government really pushed the vaccines aggressively. Cases kind of reduced in India, and by 2021 early, we virtually had very few cases compared to the population of the country. So we opened up everything, and then you saw a big jump coming in 2021 where we saw record demand in India. Nearly record demand in India. We saw the kind of figures that we've not seen in last few years, and that kind of, I would say, growth has continued. So India is one example where we saw that 2020 you saw the big drop, and then 2021, 2022 very fast recovery. If you compare China to that, in that sense, China went ahead with the zero COVID policy. So, there the impact has been very different. In other parts of Asia, if you look at Thailand, Indonesia, they've seen slow and gradual recovery as tourism picks up, as the economy activity picks up. So each country in that sense is very different and reacting very differently to the economic conditions, to how governments have reacted in the Asian region. However, one thing which is widely expected is that in most of these countries, a bounce back is visible or is coming.
Okay. Interesting. I think maybe I'm going to skip ahead to my last question, which is really looking at kind of the physical markets in India versus China, maybe other places in the region. So maybe you can talk a little bit about the difference in impact that the various markets might have on the markets overall.
Sure. So, as I mentioned earlier, India has seen a consistent bounce back, right? We have seen where post 2021, the growth has continued into 2022. What we've also had in India is that, few very interesting changes in the Indian market, which is happening. Post-COVID, the younger generation also realized the importance of gold as an investment, having gold in their portfolio, or just the jewelry buying. So suddenly we are seeing the average ticket size in India has gone up over the last 2 years. A lot of people that we speak with would tell you that earlier probably the average ticket size was 8 to 12 grams. Today the average ticket size is 12 to 15 grams. So the average ticket size has also gone up in India. Now this is essentially because of two factors. A lot of younger people have started buying gold because they realize that gold is an important investment that one should have. But also the fact that what is happening in India is that there are a lot of, I would say, behavioral changes are also happening, in the gold market. There is a growing preference for studded jewelry in India. So that is also, kind of pushing the ticket sizes, higher. There is also a lot of gold, bought during the weddings. So that also, kind of pushes gold higher. China, in that sense, the recovery is likely to come now because the Chinese economy is just opening up. So you will see that, all the, probably base effect coming into picture. People did not probably buy gold to that extent. What they bought over the last 2 years, they will start buying now. So China, you will see a gradual recovery coming in. If you look at some of the other parts of Asia, in East Asia, Thailand, Indonesia benefits from economic growth, tourism returning. Whereas if you look at Sri Lanka and Nepal, or Sri Lanka for that matter, has seen a sharp reduction in gold buying, because of the economic crisis that they've gone through. Similarly, for Pakistan in this region, which is going through an economic crisis, that has seen reduction in gold buying. So if you actually look at, while Asia, we believe that Asia this year is likely to drive the global gold demand, jewelry demand. Essentially, it is likely to be India, China, and parts of East Asia.
Okay, great, interesting. And I thought we could close by just looking at the impact of, the Indian and South Asian physical markets, the impact of those on the global outlook for the precious metals and for gold, as well as the others. What's kind of the impact of these markets?
So I think, if you look at gold and silver, right, India is among the top for gold. Last year, India was the largest consumer because China, because of zero COVID policy, China had a drop in jewelry demand. India was the largest consumer of gold last year. So was for silver. Silver, we did about 9,000 tons of silver imports, which is a record, So India is a very, very key gold and silver consuming country. If the point is that whether that drives prices, no, that is not the case, because India is a one-way market, where gold and silver just comes in. There is no essentially global trading that happens, and that is why you see essentially the price drivers are London, New York, where it's a two-way trade, where gold is traded and from there gold is supplied to the entire world, So India is more, I would say, a kind of price taker, a key driver of the global demand, and also somewhere, if there is a strong level of buying which is happening in these countries, then to some extent it can provide a floor, but only marginal. It's not, as I said, it's not a price driver. It's a price driver of demand rather than it's a driver of demand rather than the price in that sense.
Okay, absolutely makes sense. Well, Chirag, those were all of the questions that I had today. I want to thank you for joining the Precious Metals online event, and hopefully you can join one of our in-person events sometime soon as well. So thank you.
Absolutely, looking forward to it.
All right, I'm going to stop recording. Thank you very much. I thought that was